Hey guys, what's happening? I wanted to do a video on TSS Cycles and why it's different than most other technical analysis out there, and how it's different. I'll show you on some charts what I mean by that. But this type of technical analysis was developed over probably a few decades of researching in reverse engineering big winning stocks and finding consistent timing mechanisms based on the different time frames, whether it's monthly, daily, weekly, etc. And it offered a lot of predictability about how long to wait after initial, let's say, a left-hand side of a cup and handle pattern is established. Now, if you have a long-term run to that left-hand pivot, let's say 12 months, 16 months, something like that, it might be a different level of TSS cycles inside of the cup before you get the final breakout. So it's all about cutting off or shearing off the extraneous consolidation zones. It's real easy to just buy outside of a pivot. You know, if you buy the breakout on the right hand side of a cup based on the high of the left hand side of the cup, that's easy. Everybody can do it. But if you instead decide you want to get the best entry in the cup possible without having months of the price action doing nothing, you can use TSS cycles to do that. Again, it's all a lot based on how fast the left-hand side of that cup formed. You might use one cycle if it formed really quickly. You might use another cycle if it took a lot longer to do so. Price basically moves through a series of channels, price channels. Some traders may think it's just trend lines, but they're actually organized channels, price channels. There's a series of overlapping price channels, and generally speaking, whenever a price trend hits either mid-channel or the extreme channel of the trend direction, a lot of times it will reverse off of that. So at that point, you get another channel forming, and sometimes they're connector channels, sometimes they're extended consolidation channels. But the reason why I made such a big deal of it, and still do, is just because I don't like getting stuck in consolidation zones. I've been in enough trades where the stock did nothing. And again, it's easy to do that if you buy outside of a cup, but I want to get in at the lows of a cup without having to spend too much time finishing up the consolidation. So it's just a better way to trade, in my opinion, and I've been doing this for a long time, gone through tens of thousands of charts over and over, and this is not just something I just came up with. These are very consistent cycles. I've been able to use them on intraday trading, not only on time-based bars, but also volume-based bars, and just any kind of bar. The cycles are very consistent. And so I'm going to go through some charts, kind of break it down for you. Also, these cycles can be used on ETFs, Forex trading, etc., futures. And again, these trend lines, cat channels, form based on fractals. Fractals are where you basically have the price set up where you have let's say a middle part of that is the fractal. You have, let's say, 2 weeks of trading action on this side of it, and then 2 weeks of trading action on this side of it. So that forms a fractal. Fractal becomes a trend line, depending on whether or not there's another spike above it or below it, depending on the trend direction. But it has really made a difference in my trading. I've combined it with a few technical indicators that also help a lot. But as far as overall technical indicators, I really stay away from them. They're lagging. I find that TSS cycles are predictive, where I can use a target channel line based on where whatever cycle is currently formed, and a lot of times it will hit that to the tick. It's just a very, very powerful predictor of the trend direction where the prices are going. So again, focusing on meat of the move trading, and let me see if there's anything else I want to cover on that. That's it. I'll just go ahead and break down some charts and show you how these TSS cycles form and the cycle channels. And I think you have a much better understanding and appreciation of the fact that This is not a lagging indicator. Again, it's very predictive as far as the length of consolidation and potential targets, price targets. So let me just go ahead and show you some charts. Okay, let's look at a couple charts so you can kind of understand a little bit better about how this whole cycle thing works. So again, we're looking for a run-up and a pullback into consolidation zone. This is on COST Costco, and as you can see, for this particular stock, pretty deep pullback, 30 bucks or so. And so this initial shakeout, pretty harsh. Now I know traders who, because they love the stock, would automatically wanting to be trading any shakeout and cost immediately. And reality is that it's got to work its way through the fan lines before you're going to get a protracted reversal. And so if you're trying to catch the falling knife down here, you're just being silly, because it's just not going to happen that quickly. It's got generally 3 fan lines to work through. We've got Cat 1, Cat 2, and Cat 3. This is a TD6 cycle, the first one. The second one's a TD9, and the third one is the primary cycle, a TM1 cycle. As you can see, once that sets, the mid-channel violation is where you look for the entry. Now this is just shy of that, just by a hair. But if you see it come that close and you start to see some reversal bars, that was the case here. You actually have internal daily swing cycles inside of this too. So if you're a swing trader on these big stocks or buying options on these, this is what you really want to be paying attention to. How are these cycles playing out? So once this Cat 3 sets, that's where you get your big move off of that. If you're trying to play around in here, you're just wasting your time, because you don't get much of a move out of, especially Cat 1. Cat 2, a little bit more off the mid channel, but even that, 10 bucks or so, this is where you get your big move. And again, so once that's set, you get your internal swing cycles. You get a TD1 and a TD2 and a TD3. Any one of those, not a TD3, a Cat 3, looks to be about a TD6 on that. So once that breaks out, you got your trends. You got the cycles on the underside of consolidation. I'm not going to get into that. I think you see the gist of it. We're trying to, again, focus on getting outside of the Cat 3. The cycles could be any cycle, the fractal setup where they set up. We're not trying to force a TM3 cycle in a cup that just had a brief pullback. So it just works out differently for depending on what the run-up was prior to that. Let me show you the next one. Okay, this is on Total System Services. This had a big run-up 2015 and had a cup form in 2016, but ran from 27 or so up to 55, so about 100% gain. Slow on the vector, about a VR6 plus on that. But the cycles off of the low of consolidation, TM5, typical cycle, you have the internal cycle here, TM1, before it rolled over. But didn't hit the TM5 extension channel. But you had pretty clear evidence that this is rolling over, and pretty good shakeout here. So you got your Cat 1 here. Again, let's not try to catch falling knives. We got to let these cat lines set. So TM1 is typically the cycle you'd be looking for after a big run up like that. That'll be your first cycle. And then you get the Cat 2 set. That's a TM3 cycle on this particular consolidation zone. Pretty good run up from the lows on that. So just fell short of the pivot there. You got a TM3 set. So you get Trendline number 3, Cat 2, Trendline number 2, TM3 cycle. And then you get a little bit further out. You get a breakout of that first part of that. That was actually still a TM3 cycle at that point. That's TM3B. Let's pull that out. Yeah, TM3B. So you get Cat 3 here. And so you get a pretty, deep for this particular stock. I mean, it was well above the midpoint. I wouldn't say well above. It was probably above the midpoint of that run from here to there. So you got internal cycles now. So big run up. You're going to have extended consolidation. Again, this is typically going to be a TM5 consolidation zone after the big run up on a stock with this volume, trading volume. It just takes a while to work out that selling pressure. So basically, you got a TM5 cycle setting up over here. You can go internal. You can go straight to that peak right there at TM5 and get a good entry on that. But the internal cycle's set up on that from that mid cup. So you got a TM1 here. You got a TM2 internal cycle. All three of these are internal from that pivot there. So you get the Cat3 TM3 cycle internal, and then you can drill down. Once you get that form, you got daily cycles in here. You got all evidence that you have your entry over here. And again, big strong cup and handle, and we want to catch it. We don't want to catch it over here. Sit through 5 months of your money not doing a whole lot, going from 48 to 54 bucks. Again, we want to let Cat 3 set, even on this part of it. We got Cat 3 setting at the big thing, but you have to go internal and get your Cat 3 set here. So you got Cat 3 there. Pull back off of that. If you're paying attention to these cycles, you're in over here. You're not wasting all your time with this unproductive consolidation zone. So get the breakout around 54 bucks or so. You got a PBC zone up there. So you got the run. And there's some cycles off the bottom there. Looks like a TM1, TM2. Very nice run from that 54 to $85 or so. And another consolidation zone. And gets outside of that guns 100. So almost, well, pretty close to 100% from the, actually from here, 100%. That's over a year plus. So you got cycles off the low. This looks like a TY1 cycle right there. But again, very important to pay attention to these because they are so consistent and they'll keep you from wasting money in unproductive consolidation zone. Let's look at one more. Okay, this is VCEL, VCEL, VCEL Corporation. Had a 2 BMI breakout, deep tube trade. And TM1 pullback again. Once the TM1 set, you get very close to exactly hit the mid-channel violation right there. Takes off again, so you get your uptrend. So what happens is when you get acceleration of momentum after initial start of the trend, you go internal on the cycle. So you got a TM1 off the lows right here. Extension of that TM1 cycle is a good target zone. So once you get that going, you got measure your pullbacks here. You got another, actually you got TM1 here, and then you got a TD9 right there. And so once you got your fractals set, you start building mid channels and extension channels. Right there, you got a mid channel violation. And so at this point, it's up. Let's see, it's up close to 600% or so. So it's going to need to rest. And that's what happened right there. Pull back in the cup. It's up 475%. It's pretty frothy. So at this point, you got pull back in the cup. You got again TM1 cycle, Cat 1 in the cup, and then you get your Cat 2. It's a TD9 cycle, and you get your Cat 3. This is higher than that pivot, so that tells you we're going to have a upwards facing cup. That means we have a strong price action within the cycle. So we're looking for potentially a soft landing pullback off of that. So if you take this TM3 cycle, pace it across the lows, split the difference, you're looking for at least a mid-channel violation. That's what happened. It fell short of the lows of channel. So you didn't get a south channel violation. You had some psychological price support right there at that $10 mark. So it breaks out of the TD6 cycle. This was a good place to enter, right around that $12 mark in the break of TD6. But once it got outside of that, got a PBC zone basically, and that's where it's at right now. So we got a TM1 cycle up there. It's probably going to break out of that with this level of momentum over there, and this short of a cup. This quite likely it would fall through. Would not be surprised to see it potentially double out of here. I kind of wonder about that, just because there's, at this point, at 25 bucks, you're up 1,000% on a super cycle, and that's a lot. That kills a lot of super cycles. But either way, I mean, that's still a nice run, especially if you bought over here. You got 100% gain. That's another thing that will start bringing the selling pressure in, is the basement supply from these consolidation zones. But this is a really overall a very nice pattern quality on it. Performed very well. Optionable stock. So these are the kind of trades we look for, and we always want to pay attention to the cycles, because again, why would you want to get in here and waste 1, 2, 3 months of your money doing nothing? Again, looking for Cat 3 pullbacks. Would you rather be in here, or would you rather be in here? You know, practically the same price, but 2.5, 3 months of nothing here. I mean, it's just so consistent to have these cups act the same way about every time, based on the level of momentum going into that. So don't fight the statistics. I mean, we're talking about 10% of the time it's going to bucket where it comes out of here and heads up that quickly. Normally we're going to get a TM2 cycle before you head out of the even a short cup on that. So pay attention to cycles, and you'll have a lot more productive trading over the course of the year. Okay, that about wraps it up. I hope you enjoyed the video on the TSS cycles, and if you'd like to be notified when we post more of these videos in the channel, just hit subscribe and also the bell icon to be alerted immediately when we post a new video. Have a great day. Thanks for dropping in.